This episode of the What the FinTech podcast is sponsored by Signicat. Hello and welcome to another brand new episode of What the FinTech, the podcast from the team behind FinTech Futures and the Banking Technology magazine. My name is Paul Hindle, editor at FinTech Futures, and for this episode we're joined by Pinar Alpay, Chief Product and Marketing Officer at Signicat. Pinar, welcome to the show.
Thank you very much, Paul. I'm very happy to be here, so thanks for inviting me.
Excellent. It's great to have you here. Just to get started, would you like to quickly let us know a bit more about yourself then and the work you're doing at Syndicat?
Yeah, great. My name is Pinar Alpay. I'm based in London, and I'm Chief Product and Marketing Officer at Signicat. I've been at Signicat for 2 years now. It will be 2 years in April. But before Signicat, I have been at various product leadership roles at WorldPay for about 7 years. And way back when I started my career, I started working at Bain & Company. I was there for about 9 years in various European offices. Then I worked at Barclaycard as head of strategy and planning. I had my own business for a while as well. And now I found my way to Signicat. And the vision of creating trust in the digital world is super appealing. So that's our mission.
Excellent. Sounds great. And yeah, hopefully we'll dive into that a bit later in the show. Great to have you here again. And thanks so much for taking the time out to speak with us today. So on the show this week, we'll be discussing digital identity and its relationship with financial services and the work that companies such as Signicat are doing in the space. In particular, we'll take a look at the evolution of digital identity over the last few years, how banks and other financial services firms are looking to adopt the technology, the digital identity landscape across Europe in light of the EU's digital identity wallet pilots, the importance of trust, and of course the challenges around fraud given the increasing use of AI and deepfakes and what companies can do to combat this. That's all to come a bit later, but as always, we will open with our news in number segments. This is where our guest has gone out and found a news story featuring an interesting number to discuss and get us started. So, Pinar, what have you brought along for us today?
Yes, I brought along this news story. Actually, it's quite recent, back in February 2024. And the title says, finance worker pays out $25 million after a video call with deepfake chief financial officer. And the reason I brought that is that's super interesting and is addressing a very, very current issue of rising fraud especially with deepfake technology. And what they are talking about in this news story is about a finance worker who actually takes part in a video conference with a few other people. It's a multi-person video conference, and every single person in that video conference is fake. And the person has no idea, and basically they get persuaded to transfer. This thing was happening in Hong Kong, so 200 million Hong Kong dollars, this is equivalent to 25 million US dollars of money into the fraudster's account. It's incredible.
Yeah, it's quite scary as well, isn't it, really, that we've
Yes.
reached a point that the technology is kind of advanced so far that this is capable of happening, really. And I guess it kind of raises the question then, with the big leaps being made in AI and especially deepfakes at the moment, how much of an issue is AI fraud becoming now in financial services in particular? And is that a growing concern among customers given the hugely sensitive data involved?
Yes, very much so. One of the most important trends we see today is, of course, the rise in fraud, but also within that, AI-driven fraud and deepfakes. And some data I can share. As you know, Signicat has technology to be able to detect this kind of fraud. In, for example, 2022, 0.1% of all fraud was AI-related. 2023 rises up to 2.5%. And in 2024, just for first 2 months of 2024, 6.5% almost. It's quite a large leap that we see. And as the fraudsters become much more sophisticated, of course, we also up our game and stay a few steps ahead of the fraudsters, but that's definitely a growing concern.
Yeah, and obviously, I mean, looking back at this story as well, as you mentioned there, this person was in a group chat with a whole bunch of deepfake people and wasn't able to seemingly tell the differences. So, I mean, what are the key challenges then for you when it comes to detecting deepfakes and fraudsters, and how have you gone about tackling that?
Yes. The technology that we have today is also partially available to fraudsters. So they can get more and more creative and use Gen AI to create injection attacks and presentation attacks But that's why we also stay a few steps ahead of the fraudsters. So we use multiple technologies to be able to identify the initial risk. For example, we look at device data, we look at behavioral analytics, and then establish the document authenticity, the likeness and liveness, the geolocation, multiple measures against presentation and injection attacks. And in the end, if need be, we also have agent inspection as a fallback. But we have multiple technologies that are available to us to be able to identify this.
Main topic of the podcast today, then we're going to be looking at digital identity. How would you define digital identity then, and what is it specifically we're referring to when we talk about that?
Yes, very good question. Digital identity is basically how we prove who we are in the digital world. And this applies to organizations as well as machines. And anytime we need to do business online, we need to use some sort of digital identity to create trust that's needed to execute on that transaction, be it in the form of an EID, for example, like IDIN in the Netherlands, or a passport scan and liveness and likeness checks.
Excellent. And we've spoken a little bit, obviously, about what Syndicat does on the fraud front of things there, but can you tell us a little bit more about what the company does then in the digital identity market and what kind of services and products you offer?
Sure. Signicat is a pan-European leader of digital identity solutions. We are headquartered in Norway, but we have 16 offices in 14 European countries. And our solutions cover the entire digital identity lifecycle, from compliant identity proofing to secure authentication to high level of assurance electronic signatures and orchestration. And our orchestration products primarily support remote onboarding to help organizations digitize and automate these manual KYC and KYB processes. We are unique in the sense that we solve the regulatory complexity on a pan-European scale with the full range of digital identity solutions. And this is super complex on a pan-European scale because there's a fragmented mix of national and pan-European regulations with national bodies. And for example, in Italy, there's AGID, in Germany, there's BaFin, and these are continuing to push and pull in different directions. Signicat solves all this complexity at European level, but also with global coverage. We have a platform and an ecosystem that includes our own software, as well as more than 170 identity methods and data sources in our platform. Our clients operate in 42 countries. They are typically companies that need to operate in the highest level of assurance markets like financial services, payments, fintechs, governments, public services, as well as e-health.
Excellent. Yeah. So, I guess on the topic of digital identity, then how much has that space evolved in recent years, and what kind of technology advancements are we seeing in the space at the moment? And can you give some examples of how banks have looked to deploy this technology?
Sure. We see different types of digital identities depending on the country or depending on the use case. For example, in the Nordics, Central Europe, and Baltics, we see the emergence of EIDs. And then in other countries, you see sort of identity document scanning as well as likeness and liveness checking. We see the origins of the EIDs that I mentioned today in the 2000s. And depending on the country, they were introduced by governments or banking associations. And over time, we saw the take-up and penetration of these EIDs increasing. And COVID has exploded the use of EIDs and digital identities to more and more different use cases, from payments to doing your taxes or, for example, signing legal documents. What we also saw in the recent years is improvement in the user experience with biometrics and increased security with step-ups. In countries where there are no EIDs, we have sophisticated forms of electronic identity document verification with biometrics. And during onboarding, banks use our implementation, which include an initial risk analysis with like velocity checks, device profiling, behavioral analytics, followed by identification of the individual with methods appropriate to the country or the sector. Additional evolution, for example, is for EIDs and EIDDs is also with machine learning models supporting the likeness and liveness detection and deepfake detection. So there's a lot of things happening in this space, and it's becoming more and more sophisticated with technology.
Excellent. And obviously you mentioned that Signicat has operations across Europe then. So what does the digital identity landscape look like across the continent now? Has there been widespread adoption, or is the market still fragmented between countries?
Yeah, still very much fragmented. We see electronic identities being adopted in some Nordic countries and Netherlands and Baltics very strongly. But Germany and France, not so much. In the UK, for example, there's no EID to speak of. And the AML compliant onboarding rules are different in every country. For example, in Germany, AML compliant onboarding involves a video call plus a micropayment. Similarly, regulation across Europe, as I mentioned before, is super complex and fragmented. So there's a complex mix of national and pan-European regulations. But eIDAS 2 will solve some of these things, but a lot of complexity will still remain.
Excellent. Yeah, I mean, I guess on the eIDAS 2 front as well, I mean, Signicat has been involved in two large-scale EU digital identity wallet projects at the moment. We had the news at the end of February that MEPs have voted in favour of plans for an EU-wide digital wallet now, amid the evolution of eIDAS 2 to eIDAS 2. Can you tell us a bit more about your work on these pilots then, and what kind of opportunities will this upcoming EU-wide wallet and the shift to eIDAS 2 present for companies?
eIDAS 1 was successful in defining the levels of assurance for identification and digital signatures and regulating the provision of those trust services. But what it wasn't successful in was pushing EU member states to create national EIDs and the creation of a cross-border digital market. And eIDAS 2 aims to change this. As you said, Paul, new regulation got approved in the Parliament on the 29th of February, and Council approval is expected in March. Then a draft implementing act needs to come 6 months later, and member states then have 24 months after that, which will take us into 2026. But the aim of eIDAS 2 is to deploy a national EID scheme in all EU member states, and also secure the acceptance of these EIDs by different public and private sectors, so that the use of the cross-border authentication is enhanced. And then also EU digital identity wallets will be made available to all EU citizens. There are 4 large-scale pilots. As you said, these consortiums are formed by both government and industry organizations, and there's EU funding for that. We as Signicat are involved in 2 large-scale pilots. The first one is EU Digital Identity Wallet Consortium, EWC. And the second one is NOBID, Nordic Baltic EID Project. EWC is the first one. It represents pretty much every country in the EU and EFTA. It's led by Swedish and Finnish authorities, and it focuses on travel. The second one, NOBID, its members are Denmark, Germany, Iceland, Italy, Latvia, Norway, and it will focus on payments and wallets across Europe. Our role as Signicat there is to shape how wallets should be on a technical, technological, and regulatory level, and also to define their use cases. And we think that there is many different roles for Signicat here, given where we are in the digital identity space. For example, brokering between many different wallets, that is probably going to endure for some time. And also enabling getting data into the wallets, getting data out of the wallets, and then enabling the users to do stuff with the wallets, like signatures. And we think that there's quite a lot of opportunities for both companies as well as individuals here. We see the wallets, for example, enabling these universally adopted digital identities in Europe, and this will, for example, increase and stimulate cross-border activity in the EU and improve the economic competitiveness overall in the market. And then we also think that easier and cheaper onboarding of users across borders will allow digital challengers to become maybe more active, and it's going to create a lot more competition in the market. So a lot of opportunities.
Excellent. Yeah, exciting times ahead then by the sounds of things. And given what we've already spoken about then, I mean, what kind of challenges will the EU digital identity wallet face in terms of its rollout and uptake, and what steps do you think are needed to make this a success?
There's a lot of things, actually. This is not going to be an easy game. Firstly, the large-scale pilots are going to go well into 2025 and maybe 2026. But even after that, there's a lot of things that need to happen. One is that you need use cases that add value to the consumer so that the take-up is not natural. Two, you need to have trust among consumers that their data is safe. Public opinion at the moment is uncertain around the wallets, and this needs to be developed. Of course, the objective is that the individual is more in control of the data that they share, but trust needs to be built up. And the next thing, of course, is that you need a cost-effective implementation for companies and member states. The fact that EU will mandate the acceptance of the wallets in certain sectors is going to help, but this needs to make sense commercially. And at the moment, the business model for all actors isn't that definite. For example, there's no business model today for some actors like attribute attestation providers. There's also, for example, achieving the interoperability with the other EIDs that I talked about today. EU digital identity scheme cannot be designed to be the only EID, which means that there needs to be some sort of interoperability. So there are a lot of things that need to be right before there is universal take-up for the digital identity wallet.
Excellent. Yeah, and will this help companies that are operating across different countries then in Europe to ensure compliance as well across different jurisdictions?
Yeah, absolutely, it will help. But this is expected to take some time, as I said before. It's not going to happen overnight. But once it happens, it's going to improve competition across jurisdictions and will help with compliance. But as with a lot of things in EU, we do expect different flavors by country and local regulatory bodies putting their own twist on things.
Excellent, excellent. And from a customer's perspective then, there's often discussions around trust when it comes to digital identities. What would you say the current sentiment is like among customers at the moment towards digital identities? And is that trust there, or are they still a bit skeptical?
This really depends on the country. Users in some countries don't think twice about using their EIDs online. In other countries, we see skepticism in sharing the data in the online space. And it really takes a lot of time to change behaviors. eIDAS 2 certainly aims to give the individual more control of the data that they share. And the more use cases for digital transactions you have, as the user experience gets better, individuals start to trust digital transactions more. But this is a bit like cash, right? For years, we have had secure and good infrastructure with credit cards to pay online. We had alternative payment mechanisms in each country. We have open banking now as well, but still people use cash. So it will take time.
Yeah, for sure. What do you think can be done to improve trust and education in this area then?
I think it's about attractive use cases, communication on security and time, and attractive use cases, enticing people to do it once and then see that it can actually be secure.
Excellent, excellent. And with more and more customers now switching to digital banking and using digital channels to conduct much of their day-to-day lives, what kind of benefits will customers see from having a digital identity then that can be used across different verticals?
I think it will be about being able to conduct their business easily across the different use cases. It will improve customers' experiences and convenience when using these services, both for saving time as well as being useful in the sense that you can have much more customized services or offers just for them.
And I guess then looking to the future, what do you think is next for digital identity in general, and what's next for Signicat as well moving forward?
We as Signicat will continue to use technology to strike a better balance between security, privacy, and user control. And we talked a lot about wallets, so I'm not going to get into that. But for example, biometrics is going to continue to evolve. We might see more advanced techniques like vein pattern recognition or gait analysis or even brainwave-based authentication out there. Ensuring privacy and consent, of course, in biometric data usage will be critical. And AI will continue to enhance identity verification processes. Signicat will continue to be at the forefront of these technologies and seek to add value to the customers' businesses by bringing together our technologies to solve the customer problems and continue our mission or further our mission of building trust in the digital world.
thank you so much again, Pinar, for chatting with us today. And to close out the podcast, we have on our infamous Fintech Jail. So this is where we ask for an industry term, buzzword, or trend that you've seen or heard enough of. So, Pinar, what's your selection for the jail then this week?
Yes, I would like to throw disruption in jail because we live in a constant state of disruption. So I think it would be in favor of putting disruption in jail. But on the other hand, I'm glad that AI is released from jail. I saw that in the history that AI is released from jail. Although it's really overused and sometimes in the wrong context, I want to keep it out of jail because we will need to talk about it a lot when we talk about a wide range of subjects, all the way from fraud detection to, for example, automated investing, scorecard optimization, and similarly, less free machine learning as well.
Excellent. Sounds good. Yeah, I'm fully with you on disruption. I think that's exactly the kind of word that the Fintech Jail was made for, really. It's one of those words that just gets thrown into various press releases and starts to lose complete meaning after a bit. So more than happy to throw that in. And yeah, in terms of freeing one, let's do it. Let's do a 2-for-1. Yeah, machine learning. I mean, like you say, AI, I think, has been in and out of the jail a few times now, largely for the reasons that you just mentioned there as well. Obviously, there's a lot of great use cases and reasons to be happy about AI, but obviously with the hype that it's been getting maybe over the last year or so, especially with generative AI, I guess it's been getting some people have been wanting to see away with it, but that's how the jail now. I think machine learning has become almost like the forgotten brother almost of AI as well, and it's been left in the jail for quite a while now and hasn't been broken out quite so much as AI has. But
it's time for it to come out.
Exactly. I think it's done its time now, right? It needs some time out in the open as well and get some rehabilitation done on the outside. So I'm more than happy to free machine learning as well. Thank you so much again, Pinar, for joining us again for this podcast. It's been a pleasure speaking with you today.
Thank you. Thank you for having me.
Well, that's all we have time for this episode. Thanks, of course, to Pinar for joining me. As for FinTech Futures, you can find us online at fintechfutures.com, on X at FinTech Futures, and of course on LinkedIn. If you like this podcast and our other episodes, you can subscribe on Apple Podcasts, Spotify, SoundCloud, or your favorite podcasting service to get notified about future episodes. Thanks as well to Arama for editing this podcast. You can check them out at arama.tv. As always, thank you very much for your support. We'll see you soon for another episode of What the FinTech, but until then, goodbye.